Hi, everyone. Welcome back to Advancing Your Business, Your People, and Your Legacy Conversation series. My name is Kendall Rawls. I'm the Director of Development with the Rawls Group, your host. CFOs have often completed training in the technical aspects of succession planning and have a diversity of business experience. In this episode of the CFO and Their Role in Succession Planning, Brueggeman, a senior manager, Ed Reinhard, a partner with Crowe, and our very own succession planner, Loyd Rawls, discusses unique opportunities a CFO has to motivate and support the succession planning process. This is important because succession planning builds value, whether the goal is to grow or sell. Listen in to understand how a CFO plays a pivotal role in achieving the owner's goals. Brian, can you share what opportunities are available for CFO, SFOs in succession planning?
Sure, Kendall. CFOs obviously can play a huge role in succession planning. Obviously, they have a very unique view of the business and some great perspective on critical succession factors. Also, a lot of the times, these CFOs are trusted business advisors to the owner, so they may be able to push the owner to get the process started. Finally, a lot of CFOs know very smart people like the Rawls Group and can assist in putting the owner in touch with the right people.
Thanks, Brian. And Loyd, are there other opportunities for CFO, SFOs in succession planning?
Yes, Kendall, there certainly are. A chief financial officer, by virtue of their career, has oftentimes had training in many of the technical facets of succession planning. This is a wonderful resource to their employer, and their prior experiences with other clients or with other employers in estate planning, in liquidity planning, in successor preparation, in strategic planning. That back history of experiences is extremely valuable. And CFOs are not compliance officers. They are reliance officers. And this history of information, this experience they have, is something that a business owner would like to rely on. And the opportunity is for the CFO to step forward and say, you know, I've seen this before. I've been here. Let me share with you what I have been exposed to before. That can be a great benefit. And we would highly encourage all CFOs to let it be known that they've had prior experience and that they could be a resource, because just encouraging that the owner take action and encouraging the owner that they can find solutions to some of these face-numbing issues, I mean, that can make a world of difference in the succession planning world.
And Ed, what are other opportunities can you add to what's been shared?
So these financial officer types, typically they've been in the organization a long time. So they really know the institution, the historical performance patterns of the institution, and they know the individuals. They know, the general managers, they know the owners, they know the kids' strengths and weaknesses. And this is, a soft side item, but it's very important to share, as the estate attorney or the succession planner or the Rawls Group might not know this, and they could prevent walking into something that they've already tried to have, owner's son run 3 or 4 stores and they failed miserably. So, sharing that type of historical institution knowledge, soft side type items, I think is very important. Maybe one child is better with people than the other. So maybe that's the role for that one versus another child may be more of an operator. So trying to give any intel around that to the team. The other thing I think they have an opportunity to do is really share any financial skeletons that might be buried in the books. There may be some, there may not be some, but it's valuable information typically to know sooner rather than later. There's something in dealership organizations in particular called cash plugs, where the dealer plugs the cash account and they hit the other side of the balance sheet. I know I'm getting really accountant here on you, Loyd, so I apologize. But at the end of the day, a planner like the Rawls Group may think this company's flush in cash and they can pay some estate tax to get this done, or they can pay out distributions to fund things where it may not even be in the game. So the sooner that those type of key items are communicated, I think the better the process and the more efficient the process would be.
Thanks,
Okay,
Ed. And Loyd, can you explain the succession challenges CFOs understand and how they provide support in facilitating positive outcomes?
Well, certainly, Kendall. The first one I'd bring up is profitability. CFOs understand that there are hazards to profitability, and that when there's a change of ownership, profitability typically is compromised. They understand that if an organization is to survive a change in management and a change in control, they need to pursue a higher level of profitability so that when this does occur, any drop back in profitability will still be to an acceptable level. They also understand the life's blood of working capital, and as opposed to many business owners who want to keep their businesses very lean, withdraw any excess capital. CFOs understand that working capital is critical, and once you've withdrawn the capital, it's difficult to ever put it back in. Succession of a business requires working capital, because you never know what the future holds. And as we've seen with COVID, as we've seen with the Great Recession, succession planning requires preparation, and CFOs understand that preparation is a function of working capital. Credit continuity. CFOs understand that in the fine print of those capital loans, there is those little very famous words called due on death. One of their roles is to read and understand any of the loan agreement, and to make sure the owner understands that succession could be in great jeopardy because of credit continuity. Also, from an estate tax standpoint, sure, you can use the 6166 borrowing from the government to pay estate taxes, but the CFO would understand that, hey, the IRS is going to take a senior position, and that senior position may not impact any of our current loans, but when those revolving loans come to renewal, they automatically fall under the IRS, and your creditors are going to say, no mas, no mas. CFOs fully understand that. They also understand that estate taxation can be a major tsunami against the succession of a business, and the best thing we can do is look for avoidance opportunities. That typically they've been involved in these exercises in prior jobs, and they understand that there's a lot that can be done to avoid taxation. They also understand strategic vendor vulnerabilities, that if a franchise or a licensee or a licensor of strategic products, that if you lose one of those, the plan for continued success could be in great jeopardy. And then notably, I would say that the CFO understands the importance of key managers, and how those key managers are the real drivers for success, and that it's imperative that those key managers be given affirmation, they be given peace of mind that succession is a topic, that their career, their future will not be in jeopardy if the owner were to retire, if the owner were to step back and let Junior take over and Junior didn't know what he was doing. So the CFO is the advocate for these key managers, and they're also the wingman for the business owner, who would advise him that, listen, we've got to understand who our contenders are and who our pretenders are, and that we have to understand if we have any major dependence upon key managers, And if we do, we've got to address that so that there could be a smooth transition of ownership and management to the next generation.
Thanks, Loyd. And Brian, to round out the topic, in addition to what has been shared, what else is important for CFOs to know about opportunities in succession planning?
Thanks, Kendall. Yeah, since CFOs probably do not do this very often, obviously they may have some experience from their past job, but just giving that, succession planning could be generational in nature. It can obviously be a great way for them to demonstrate their leadership. Most CFOs are well educated and have great knowledge, experience, and expertise in the business, which is critical to ensure that succession planning runs smoothly. It is also a great opportunity to have impact for those who will have a continuing interest in the business. And finally, it is a great way for them to continue to gain trust from their business owner. And Loyd, just a question for you. What percentage of clients that you go into, I guess, are, well adverse for succession planning, or, either you go in there and it's a complete mess? I guess what's your, percentage, or what do you typically see? And I guess what makes clients successful versus unsuccessful at planning?
Well, interesting question, Brian. Thank you for bringing that up. We do see businesses that are in the full spectrum of preparation for succession. And typically, when we encounter a business that has done a respectable job of planning, there is a CFO who understands that one of his roles is to look to the future, look to the horizon, and to identify the issues that can impact the business. And the only way to deal with those predictable, probable, and possible contingencies that are on the horizon that can impact the continuation of success is the plan. And what percentage are those? I would say that about a third of the companies that we encounter have done some very respectable planning. I would say that another third of them are conscious that they need to do planning, and then probably a third, the remaining third, are just unconscious. They have not really focused on the vulnerability of that business, and they haven't focused on the stewardship responsibility to their employees, to their senior management, and to their vendors for keeping that business afloat, keeping it moving forward, keeping it strong in the event of a transition of ownership and management. Thanks for that question, Brian. And let me offer you a question too, Brian. I understand that you have some educational tools for CFOs. Could you explain that?
Yeah, so at Crowe, we host CFO roundtables, which with COVID, we've been doing them monthly. And so we really just kind of cover a wide variety of different topics and just kind of bring up, either accounting or succession planning or tax plan, just talking about what's top of mind to a bunch of the CFOs, and just kind of trying to educate them on, not sell them anything, but just educate them on some of the current topics that are prevalent in the market, and information that they may find beneficial to take back to their business that will help with operations and some of the accounting aspects of it.
That's a great opportunity, because I would just add as a final comment, Kendall, that one of the disadvantages I find for CFOs, controllers, and SFOs is that they do not get the exposure outside of their business that they should. They're not hearing about problems that other organizations are encountering. They're not hearing about opportunities, and they're not hearing about special ways of dealing with special problems. And I think this opportunity for the chief financial officer and their cohorts to participate in these collaborative organizations, I think it's very, very beneficial.
Brian, if someone wants to be a part of that group, how can they join?
Yeah, they can just shoot me an email, and I'm assuming our emails will be made available. I could spell it out, but it might take another 5 minutes as my last name is kind of long, but essentially it's just my name on the screen with a dot in between the Brian and Brueggeman, and then at Crowe, CROWE.com.
Awesome. Thank you. A CFO's diversity of business and technical experience provides extreme benefits to the succession planning process and can provide owners encouragement there are solutions to many mind-numbing issues. The next episode of the series focuses on CFO challenges in succession planning. Do you have a question you want to discuss with an expert? Feel free to reach out directly to Ed, Brian, or Loyd at the email addresses listed on the screen. Want more information on Crowe's CFO forums? Contact Brian Brueggeman. Continue listening to the series now or come back later for more. Each topic featured may want you to learn something new.